The standard is back, and of course, gold is at the center point of all this. From a recent all-time high of $1,800 in 2011, all the way till it broke that previous high in August of 2020, surpassing $1,900, the world has been racing to get gold. It's no coincidence that the change is happening right now, and this is the monetary reset that we've all been waiting for. Let's talk about this. All right, so I want to take a quick minute to share some thoughts. I came across two interesting articles that caught my attention. And it caught my attention because it's the amount of urgency placed upon grabbing as much gold as possible, as covertly as possible. But then again, one nation is very out front with why and what they're doing. And then one is trying to accomplish an objective on the sneak. And so it's no coincidence that central banks outside the G7 appear to be racing to gold. But why? So clearly something is going on. Something has already occurred. The world hasn't found out yet. And that is what this is all about. Accumulate as much gold as you can before the world realizes the changes that have already taken place or an official announcement. So in this video here, I want to just cover those two articles and just give a little more detail and insight into, and of course, get your take on it. So if you guys want to see more of these little quick takes, definitely leave a comment down below. Give me your thoughts, share your thoughts on top of it, add to the conversation. And then on top of that, if you're new, make sure you subscribe, hit the thumbs up button so you'll always be notified when we do go live. So in a nutshell, it's becoming more obvious that the world is in a frantic race to accrue as much gold as possible. And the reasons behind it are quite alarming. So just look at the recent surge in central banks' gold purchases. And clearly there's no coincidence. And when gold smashes record high in 2020, as I mentioned, it set off a signal. And the trust in fiat currencies, especially the Federal Reserve note, is dwindling even faster. And so the era of unquestionable dominance by the Western financial system is unraveling, and countries are waking up to the need for a stable, more trustworthy, tangible asset, and it happens to be gold. And so since central banks across the globe, particularly outside the G7 nations, have been ramping up their gold purchases, it's sending a clear signal. You know why? Because gold, unlike fiat currencies, holds its value when things go south. And make no mistake, things are definitely getting shaky and heading south now in a negative sense. So with global debt soaring at an unpayable $315 trillion, a financial day of reckoning is here. So let's focus on two interesting players in the gold rush, which happens to be Poland and Saudi Arabia. So both have ramped up their purchase of the precious metals for different reasons, of course, but with a common goal to safeguard themselves against an impeding monetary transition. And so Poland's strategy is simple. Their central bank recently announced buying back gold at a breakneck speed. So according to the World Gold Council, they purchased 19 tons of gold in just the second quarter of this year alone. So that puts Poland on par with India, the gold mecca for the most part, as the biggest buyers of gold during this period. So the goal is clear. The gold accounts for 20% of their total reserves, and it's not just diversification. Poland, caught between a relative rock and a hard place with the Russia-Ukraine war and instability of fiat currencies, is literally fortifying their financial position with gold. But then there's more, because Poland's history with the European Union and its concerns over sovereignty, both political and economically, could be the driving force behind its gold accumulation strategy. And gold isn't just a hedge, as we know, it's an inflation protection vehicle. And so Poland's currency, if it were to collapse or be severely weakened by economic sanctions, which is possible if you go against the West, or they have a debt crisis, gold would serve as a stabilizer to reinsure their foundation for themselves. And of course, Saudi Arabia also. While Poland has been transparent about buying gold, Saudi Arabia, apparently, according to this article, has been quietly amassing gold seemingly under the radar. Data suggests that the Saudi Arabian Monetary Authority, or their little fund there, has been buying gold through Switzerland since 2022. Though officially their reserves haven't been updated since 2008. Make you wonder. Analysts believe that that fund has accumulated an additional 160 tons of gold in recent years. So this puts Saudi Arabia in a better position as far as a financial reset, if it were to occur, particularly one that involves the Federal Reserve note, aka the petrodollar structure, which of course has changed. So this is a small detail, but Saudi Arabia being a key role in the petrodollar structure for the last 50 years, since 71. It's tied to the global oil trade in dollars. So it appears that they're positioning themselves for a post-dollar world. So as geopolitical tensions rise and economic alliances shift, especially with countries like Russia and China, the BRICS in general, so there's going to be a fallback. And of course, gold is at the center of this. So what's even more intriguing is that Saudi Arabia's recent gold purchases likely contribute to the global gold price surge. So traditionally, the kingdom was sensitive to the price of gold when it swings, but cutting back when prices were high. But now they're buying no matter what the price is. So the fact that they're willing to push the price even higher to secure as much as they can shows that there's something imminent happening now. So expect major turbulence in the global financial system in the days ahead, and they want to be ready. The question is, why the gold rush? We all know the dollar's having its day. But gold isn't just a shiny metal, it's a hedge against financial corruption, central bank policy using it for their own protection against what they have created, inflation, protection against currency devaluation, a shield against geopolitical instability. It reestablishes trust. So the fact that gold is liquid with no default risk makes it an attractive asset in times of crisis. And then you factor in how a couple of years ago, I think it was 2019 or so, the whole Basel III and the Bank of Banks basically repositioning gold as the primary instrument to recapitalize banks, given some systemic event that might happen in the future or what they foresaw or what they planned in ahead of time. They are going to be able to shore up gold on their balance sheets individually so that they can then start over from scratch at it with zero balance, but then have gold according to how much tonnage they have to help them begin the new monetary structure, which for them will be the cross-border interaction type of activity built upon wholesale CBDCs. And then domestically, every country will come out with their own domestic CBDC or something of the like that we've been talking about for quite some time. And it has everything to do with the fact that the current global financial order built upon fiat currencies, with the Federal Reserve note being the leading one, is transitioning right now. And so with ballooning debts or mounting inflation, there's a real chance that the current monetary system could implode within the next year or two. And gold, as it has been for centuries, is a fallback plan when paper currencies fail. So countries that have stocked up on gold while it was relatively cheap, or right now, given that there's no ceiling to how high it can go, because it's cheap now, relatively speaking, they've been stacking up for some reason. So whether it's through debt crisis, geopolitical shock, or the writing is clearly on the wall. And nations are still clinging to fiat currencies without significant gold reserves are going to be left behind at the end of the day. So what do I see happening next is probably the next question. So we're seeing a new gold standard. It's not quasi, it's obvious because look at the price. And so it won't be established through monetary policy, clearly, but through actions of central banks around the world and their race to get as much as they can. So whether Poland, Saudi Arabia, or you name the government, the trend is clear. Nations are bracing for massive financial reset. So as the cracks in the Western-led financial system continue to widen, become more obvious, more countries will likely follow suit to accumulate as much gold as they can before the detonator is officially pulled. So just sharing my thoughts with you on this whole matter, because Poland and Saudi Arabia both are smaller central banks, smaller nations. But then again, if they are able to recognize, acknowledge, and strategize on accumulating gold, then we too should also realize that sound money can and will be the primary medium of which we too, if everything is reset, if there's a debt jubilee and all the fiat Ponzi debt that is on the surface, 315 trillion plus derivatives and everything else, which is $2+ quadrillion, if all that is vanquished or completely eliminated and the world is forced to start over from scratch, those who are built on something solid in the form of monetary metals, gold, silver, platinum, palladium, whatever suits your boat, they carry with them value in and of itself, whether it be for monetary purposes or utility's sake. It'll be what's used to reboot and reload. And then, of course, as always, if they have their way, they're going to use that to establish trust, and then they're going to build layers on top of it. The banks are going to financialize. They're going to have real world assets, tokenization, crypto, Bitcoin, all that stuff on top of it. And so same player, same game, just new era and new technology. That's all it is. But anyway, just want to take a quick minute, connect, share my thoughts on things. Curious to hear what you guys think. If you found value, hit that thumbs up button, and I will catch you guys later.